Hello, thanks for joining. This is Sal for Option Farmers. In this video, I'm going to give you a basics of technical analysis. I'm going to show charts and have some definitions read to you. This will be a very basic guide to technical analysis. If you've never seen it before, this will cover the very basics just to bring you up to speed.
Summary of technical analysis. Technical analysis is a method of evaluating securities by analyzing statistics generated by market activity, such as past prices and volume. This approach is based on the idea that patterns in the market can be identified and used to predict future trends. Technical analysts use a variety of tools and techniques, including charts and indicators, to identify patterns and make predictions. They believe that the market is efficient and that all relevant information is reflected in the price of a security. Therefore, by studying the price movements of a security, analysts can gain insight into its underlying fundamentals and make informed decisions about buying or selling. Some common techniques used in technical analysis include trend analysis, chart patterns, support and resistance levels, moving averages, and momentum indicators. Technical analysis can be used in conjunction with fundamental analysis to provide a more complete picture of a security's value and potential. However, critics argue that technical analysis is subjective and prone to error, and that relying solely on past price data may not accurately predict future market behavior.
So as you can see, the summary of technical analysis gave us the broad idea of what we're trying to achieve. We're really trying to figure out, are we in a strong market or are we in a weakening market? I have here the S&P 500. All the highs are rising. All the lows are generally rising as well. And if I switch the chart to a different one, you'll see that it doesn't look the same. Something changed, and you can see that the trend changed in this symbol. This is just arc K. It was in a rising trend, and then something changed. So let's continue.
Trend. Trend analysis is a key concept in technical analysis and involves identifying the direction of the trend of a security. A trend is simply the general direction in which the price of a security is moving over time. In an uptrend, the price of a security is generally moving higher over time, with a series of higher highs and higher lows. The term higher highs refers to the fact that each successive peak in price is higher than the previous peak, while higher lows refers to the fact that each successive trough in price is higher than the previous trough. These patterns suggest that buying pressure is increasing and that the overall trend is upward. Conversely, in a downtrend, the price of a security is generally moving lower over time, with a series of lower highs and lower lows. The term lower highs refers to the fact that each successive peak in price is lower than the previous peak, while lower lows refers to the fact that each successive trough in price is lower than the previous trough. These patterns suggest that selling pressure is increasing and that the overall trend is downward. Identifying the trend of a security is an important part of technical analysis, as it can help traders and investors make informed decisions about when to buy or sell a security. In general, traders and investors want to be buying securities in uptrends and selling them in downtrends, as this is when prices are moving in their favor.
Okay, so we just saw some more information on trend. I'm also adding a 200-day moving average. This is a weekly chart, but this is a 200-day moving average. It will stay fixed. And what you'll want to notice is, in addition to trend, our prices on average rising, and that's what a moving average will tell us. In a strong market, you'll see that we stay above the 200-day moving average. When things get a little wobbly, we start to get below that, and that is useful information.
Moving average. Moving averages are a commonly used tool in technical analysis that helps smooth out price data by creating a constantly updated average price over a specific period of time. This helps traders and investors identify the overall trend of a security and filter out short-term price fluctuations. One of the most commonly used moving averages is the 200-day moving average. This is calculated by taking the average price of a security over the past 200 trading days and is plotted on a price chart as a line. The 200-day moving average is often used as a long-term trend indicator and is considered by many to be a key level of support or resistance for a security. When the price of a security is above the 200-day moving average, it is generally considered to be in an uptrend, while when the price is below the 200-day moving average, it is considered to be in a downtrend. Traders and investors may use the 200-day moving average as a signal to buy or sell a security, depending on whether the price is above or below the moving average. Moving averages can be calculated for different time periods, such as 50-day or 100-day moving averages, and can be used in conjunction with other technical analysis tools to confirm or validate potential trends or reversals in a security. However, it is important to note that moving averages are lagging indicators and may not provide accurate signals for all market conditions.
Okay, here we have the S&P 500 ETF, the SPY. We also have a 200-day moving average. These are weekly bars. I've added volume at the bottom, and what volume is going to tell us, generally, it's how much interest is in this underlying. More volume is more, it could be more selling interest, it could be more buying interest, but generally there's just more transactions. When prices are high and less buyers are interested, you might see lower volume, and that would be a clue that, hey, maybe momentum is waning. So combined, all three of these things, the trend, the moving average, and volume, are telling us what is going on or what has happened in the recent past, and it could help us make decisions, in our opinion, going forward.
Volume. Trading volume refers to the total number of shares or contracts of a security that are traded during a specific period of time, usually a day. Volume is an important metric in technical analysis as it can provide valuable information about the level of interest in a security or stock. Higher trading volume indicates that there is a high level of interest in a security and that more market participants are buying and selling the security. This can indicate strong buying or selling pressure, and may confirm the validity of a trend or signal a potential trend reversal. For example, if a security is experiencing a price increase and the volume is high, it suggests that there is a high level of demand for the security, which may signal that the price increase is likely to continue. Conversely, lower trading volume may indicate that there is low interest in a security, which can make it more difficult to buy or sell the security. This may suggest that the price trend is not supported by strong buying or selling pressure and may not be sustainable. In addition to indicating interest in a security, trading volume can also provide information about market sentiment. For example, a significant increase in trading volume during a downtrend may signal that market participants are losing confidence in the security, while a significant increase in trading volume during an uptrend may signal that market participants are becoming more confident in the security. Overall, trading volume is an important metric in technical analysis that can provide valuable insight into market sentiment and the level of interest in a security or stock. It is important to note, however, that trading volume should not be used in isolation and should be analyzed in conjunction with other technical analysis tools to provide a more complete picture of the market.
Okay, now we've added a few more things. We've added indicators. So we've got the RSI right here in purple, and we have the MACD, which is the moving average convergence divergence. These are two indicators. RSI is an oscillator. It tells us if the market is trending strong, if it's overbought or oversold. And the biggest, most useful way to use it is it above the middle 50 or is it below? When the market is rising, it is above 50. staying strong, and then eventually, if and when the trend reverses, it starts to weaken. And the most useful data point is whether or not it stays above 50, or if it goes below 50. That's when it starts to get weaker, and then you'll see it start to go the other way. So this is an oscillator. MACD, on the other hand, is a trend indicator. It uses two moving averages, a slow and a fast, and it tells us is this in an uptrend. If it's in an uptrend, the indicator will show an above zero reading. When it starts to wane or lose momentum, you'll see it start to point down. When it crosses the zero, that would be triggering a change in trend. So above 1 is positive trend, below 1 is negative trend, and then the histogram measures the gap between the two signals.
Indicators, trend and oscillators. Momentum indicators are technical analysis tools that help traders and investors identify the speed and strength of price movement in a security or stock. These indicators are calculated using a security's price data over a specific period of time, and can help traders identify potential trend reversals or confirm existing trends. Oscillating indicators, such as the relative strength index and slow stochastic, are momentum indicators that oscillate between a range of values, typically 0 to 100. These indicators can help traders identify overbought or oversold conditions in a security. An overbought condition is when the indicator is above a certain level, which suggests that the security may be due for a price correction. Conversely, an oversold condition is when the indicator is below a certain level, which suggests that the security may be due for a price rebound. Trend indicators, such as the moving average convergence-divergence, are momentum indicators that help traders identify the overall trend of a security. The MACD is calculated by subtracting a longer-term moving average from a shorter-term moving average, and is plotted as a line on a chart. A signal line is also plotted, which is a moving average of the MACD line. When the MACD line crosses above the signal line, it is considered a bullish signal, while when it crosses below the signal line, it is considered a bearish signal. While oscillating indicators and trend indicators both help traders identify potential trend reversals, they differ in their approach. Oscillating indicators focus on overbought and oversold conditions, while trend indicators focus on identifying the overall trend of a security. Traders and investors may use both types of indicators in conjunction with each other to help identify potential trading opportunities.
Alright, so putting it all together, technical analysis is a way to measure the price action in something we're looking at. We want to see, is it overbought, oversold? Are investors interested? Are they less interested? How much volume? How much is it trading? Generally, that's what we're trying to figure out. We can't necessarily decide if it's cheap. We don't know if it's expensive. We're not looking at that when we're using technical analysis. We're just trying to figure out what's going on, where are we, where have we come from. You really want to look at value and other factors, maybe the macro picture. All of these other factors are also important. You don't want to trade blindly on technical analysis. When you put it all together and you have an opinion or you have a strategy, technical analysis is usually the last part when you're putting on trades and you've already decided that you want to invest or you already have a strategy. Technical analysis is the implementation part. You are looking to buy stocks over a lifetime. You want to buy them when they're cheap. Technical analysis is what you use for putting on those trades once you already have a big plan. I hope you found this useful, and if you did, please give us a like and a subscribe. Take care.